Good morning, everybody. Welcome to the Bowtie Breakdown. I'm Garry Morin The BowTieGuy. I am here in North Providence at Sierra Pacific Mortgage with my friend Peter. Peter, good morning.
Good morning, Garry.
Peter's joining us today to tell us about another loan that's out there. Not a lot of people know about it. It's called the USDA loan. So, Pete, can you fill us in on what exactly is that loan? Like, do they have to buy a farm?
No, they don't. But they do have to be in an approved area, a USDA area. So really, you can't be in a metropolitan area. So you can't buy a home in, say, Providence.
So I can't buy a farm on Manton Ave?
No, I don't think you
Okay.
can. But if you're looking, actually, Potts of Johnston, believe it or not, are considered USDA. Scituate, North Scituate, Foster, Gloucester.
So more rural?
More rural areas. And the benefit to the program is they are 100% purchase. So the borrower is not coming up with down payment funds.
Oh, okay.
So it's a
cool.
great product. The mortgage insurance is at a reduced rate, so it's more affordable. It's even lower than FHA.
Okay.
So it's a similar to FHA. So there is that upfront mortgage insurance that's factored in on top of the loan amount, and there is the monthly. Very similar to FHA, but they're reduced numbers.
Okay.
Much lower.
So it's a little bit less expensive, I guess you could say?
Yes, there are income caps on this. So the bigger your family is, let's say you're, husband, wife, 2 children, you can actually earn more than if you were just a single person.
Okay.
So, that income is flexible depending on how many people are in your household. And so with USDA, the borrower's income has to qualify.
Okay.
They have to qualify like any other loan.
Yep.
And the property has to be in a USDA area. So
Okay.
how we check that is USDA has a website, and you can just punch that address in, and it'll tell you if it's in a USDA area.
So
or
there's essentially a database of these
Yes.
areas that can be purchased in?
That is correct. That is
Okay.
correct.
Is there a minimum credit score?
Yeah. So right now, and don't quote me, it might be 640.
Yep.
I think it may be 640. It did change a little bit when we went through COVID and then back out, so it's fluctuated between 620 and 640.
So it's a little higher than
It's
like
a little
the
higher than like an
FHAs?
FHA, just due to the fact that it is 100% financing.
Which, I mean, I take that trade-off as a buyer any day.
Oh, absolutely.
No down payment versus,
It's a really, really good product, and most people have a misconception of like you said, I got to buy a farm in
Right.
Barberville. No, that's not the case. You could buy a home in Potts of Johnston.
And I make the joke, but I mean, essentially, could somebody buy a farm?
Well, farm loans are a little bit different.
Okay.
This definitely can't be a working farm.
Gotcha.
That's a different type of loan
Different,
entirely.
yeah,
Yes.
different ball game.
Different ball
We'll
game.
save that for another video.
Yep. This has to be a 1-unit property.
Okay.
Can't be a multifamily. So if somebody's looking at single family homes and it's in the right area, this is a really, really great product for whether it's a first-time buyer or not. It's a great product for them because it is 100% financing.
Yeah.
The MI is at a reduced cost, and as long as they meet the qualifications of the property being in the right location and they're making below the income cap, it's a great loan.
And the process is still the same? There's still an appraisal, there's still
Yes.
home inspection, all of that kind of stuff,
Yes.
obviously based on the terms.
So there are some differences. USDA requires some additional things that, say, a conventional loan or an FHA loan might not. The other caveat to this is where you have to kind of factor this into your offer is these loans, we as a lender, we do underwrite them in-house.
Okay.
We process them, underwrite them. But then before closing, it has to go to USDA.
I was going to say there must be another government entity
Yes.
or something involved.
Yes, the loan goes there, and depending on volume, what we were experiencing in 2020 and 2021, I mean, you could have been 3 weeks out.
Yep.
Today, I don't think we're anywhere near that. We might be 24 to 48 hours. So once we have fully underwritten the file and we have a solid approval, we have appraisal, we have title, we have income, everything's been signed off on, we will electronically send that file over to USDA, and a USDA underwriter will review it just to make sure it fits. They'll give the stamp of approval, and then we can.
So essentially, it's very similar to like when we deal with Rhode Island housing loans. The whole package goes over for approval.
Yes,
and then comes back.
very, very similar. Some lenders do have ability with Rhode Island housing that they don't need to ship the file there.
Yep.
USDA, however, nobody
No
has
matter
that
what.
option. Yes, that loan has to go to USDA.
It has to be stamped off on.
You need that approval, and it has to be prior to your note date. That's why it's very important. So we can't, as a lender, say, we think it's solid, so we're going to let you close, and then we'll ship it and we get it later.
No,
we can't.
it doesn't work that way.
Yes, that approval has to be prior to the note date.
Typically, is it, with that being said, typically, is it the same time frame for closing, like a 30 to 45 day? Or is
Yeah,
it more...
typically a 30 to 45 day isn't an issue.
Okay.
When we were going through the times in 2021 where volume was very high.
You might want to do 60.
45 to 60. But right now, a 30-day close, even on a USDA loan, is more than sufficient.
That was the USDA loan. This is my friend Peter Nastasi from Sierra Pacific. That was another Bowtie Breakdown. We'll see you next week.